The market's telling a story, learn to listen. And so if we got those signals and it works and we're listening, right? We're doing the right thing like we did over here. Doing the right thing. Taking those signals, listening. This is the How to Trade Stocks and Options podcast, brought to you by 10MinuteStockTrader.com, where we cover finance, stocks, options, entrepreneurship, education, and money. And here's your host, voted one of the top 100 people in finance, Christopher Ewell. If you're looking to create a bulletproof trading plan, then you need to get the Bullish Power Cheat Sheet. This holds the secrets that you've been looking for. You can get it completely for free at 10MinuteStockTrader.com. Be sure to like, subscribe, and watch all of our past episodes. Afternoon traders. Today is actually my wife's 40th birthday, so we had a big celebration for her at the Ewell house, I guess you could say, this weekend. And I planned a huge surprise party thanks to the help of my team, Rudes and April. And we rented out this restaurant and had it decorated and had just a really great time. And probably had close to 40 people there, so it was really special for her. Completely unexpected for her, so I was glad that we could do that. So it was a nice weekend, especially with her mother-in-law, or her mom, my mother-in-law, being in very ill health. Now, let's talk about a few things, right? Earlier on today, and just so you know, I've closed everything. At this point, I'm 100% cash. And it's less cash than I used to have. And that definitely is on the back of a losing streak. I messaged out into the Discord this morning that I basically just logged on this morning and I said, I'm done with these. We still have sell signals on all of them and outlier. And they honestly all could turn around and start going in the direction that we need. But at this point, we can't fight that, right? We still have the sell signals and outlier, but price is not reflective of that signal right now. So the only thing that we can do is start playing strong defense. And so I said, get out of everything. So I am completely into all cash. Thank you, Brian. Unfortunately, it's not business deductible because, in fact, I ordered a new suit over the weekend. And my wife was like, oh, will you buy me some clothes? And I was like, listen, when you're on camera, I can buy you some clothes. But if you're not on camera, then I can't use that as a business expense. And she's like, well, what can I do on camera? And I'm like, I don't know. So yeah, unfortunately, no business expense there, especially if the IRS is watching. But yeah, the weekend was great. And then, like I say, this morning, I was just tired of looking at these losers. And I really sat down and I'm like, okay, I know this outlier plan works. You've seen that it works. Where did we go wrong in this? And so I spent a lot of time. And in fact, I have some notes on here that I wanted to break down. So here's, this is not my normal TrendSpider charts, as you know. But I thought this was really useful. On the left-hand side are a couple winning trades we had. On the right-hand side are a couple losing trades we had. And so if we let's look at the bottom one first, COF, Capital One. This was, I think this was my first winner using outlier. Notice we got in 99.45 above the 10 period. It never came back to the half ATR nor the 10. And we ended up getting out around 104. Huge, beautiful win, easy win, and it continued on further, and then has started consolidating. But the point is it went up, it never came back and worked against us. So that was a great trade. Now let's look at CL. This is Colgate-Palmolive going short in this one. This was on May 22nd, as you can see here, below the 10 period, and it never even came back to where our break-even point was. It just kept going. And we got out at on June 8th. So another beautiful trade. Really nothing to do. Just set it and forget it. Now, on the other hand, are two trades that we put on recently. Now, on these, I said we're going to have a half ATR, 2 ATR stop loss, as well as a MACD crossover would be our exit points there. And both of those went up to our 2 ATR exit points. And both of those had their MACD crossovers. The difference really is here, right? It's not so much the entrances as it's the exits that makes a great trading system. And I loosened up my exits and paid for it. So we're going to go back to the way that we were doing it previously, which is half an ATR from entry and the 10 EMA. That's it. We're not going to complicate it. We're not going to say MACDs or 2 ATRs or anything like that. Because XOP, for example, we got in at basically near the bottom, going short, and it went up against us right away. Right? We could have got out on this candle rather than $5 later. Same with XLF. We got in. This was below its 10-period EMA. No problem. We could have got out. Boom. 2 candles later, above half ATR, above the 10 EMA. Is what it is. Everybody takes losses. And anybody who says they don't take losses is lying to you. I did get a little bit lax, especially with my family issues right now, and just trusting that the outlier data would play out over time. And we're still going to be using that outlier data, but we're going to be keeping our risk in check because, like I showed right here, when it works really well, works right away with 0 issues. When it doesn't work, outlier is going to be a little bit slower to make that data come through. And so we need to play defense and get out of the way before it starts working against us. I want to do one more on SPY, talking about that one, because we had a beautiful trade in SPY on June 1st. Nice, perfect, right out of the gate winner. It gapped up and never came back, and this is we got out on June 9th, so June 1st to June 9th. And the opposite was true here, right? We got in short June 23rd, and then we could have got out on June 27th, just 2 candles later, and still saved, several dollars. So I can still trade. I didn't blow out my account. The reason I didn't blow out my account is position sizing. Yes, I'm going to draw down, but that's okay. As we've seen, trades are definitely going to work when they work, but we need to always be sure to treat risk with the highest priority. And in all reality, I should have done better with that. Donna, good afternoon. Good to see you. So with that being said, we're going to continue on with the plan. A couple slight tweaks to the plan. Since I mentioned it earlier, our stop loss is not going to be 2 ATRs or a MACD crossover. It's going to be the 10 EMA or a half ATR from entry. And just like I'm showing here, if it's a trade that's going to work, it's going to work right away and it's not going to be an issue. If it's a trade that's not working, it's going to reverse and go against us and we'll be right out, right? There's no sense in holding it, even if the data is still showing that it's in a sell signal or a buy signal. We got to move on. Jorn, good afternoon, my friend. Are you back home, Jorn? Okay, so that's what I want to cover today. And so like I say, I'm totally out of the market right now. Only looking at one, and that will be in J&J, and I'll go ahead and hit the market analysis. Okay, welcome to the 10-minute trading room. This is how to trade only 10 minutes a day and exactly how to take the guesswork out of trading. And with our outlier trading strategy, it has a few simple steps here. And first, we need to start with our exit points, which we've already covered, so we don't have to do that. But one other thing that I want to change before Jorn gets back on Wednesday, still in Spain, living the dream, my friend, is trading in the direction of the SPY signal. Now, that's going to be really, really easy. It's either going to be buy or sell. It's not going to be anything in between. So right now, like I said earlier, SPY is still on a sell signal. We had a short position on in that, but have taken it off. But we're only looking for shorts right now until this turns around and shows a buy signal. And then we'll look for long positions. So while that runs, I did want to point out that with the outlier data, there were probably about 10 or so on the bullish list and nearly 40 on the bearish list. So there's still the market's still showing a sell signal. Lots of sell signals coming through. And so I still have a bearish outlook on it, but I got to keep my portfolio defensive. I got to stay defensive in my portfolio. So I'm not going to fight that any more than we have to. So going to the next step, we're only looking short, and we've got the list for the day. Now, I put these in the relative strength scanner. I'm sorry, not this relative strength scanner, the outlier scanner, which is based on the relative strength scanner. Several of them did pull through, all in the shorts. And I went ahead and just for saving you guys some time, I looked at the liquidity. I looked at the double back testing, which includes the trend spider back test and the outlier signals back test. And then just a couple, I need to edit that slide because I had the MACD. But I've already checked everything that we need to see. And what came through, the final one that came through was Johnson & Johnson going short. So let's take a look at that. As you can see here, we got our sell signal right here. And it's in the green, moving toward the pink. So that's the direction we want to see. Take a quick look at this, the strategy tester, the outlier theory short with a 10 EMA crossover exit. And you can see right here, that this looks good. It's got a positive backtest. And on the outlier data, had 3 out of 4 winners with a 335 average return on each one of these trades. So looks good for me. Next, let's go and set up this trade. I believe I already put in the details in the Discord that I was looking at. Where is it at? I'll just look at it again. We'll do it together. August 18th, so that gives us 39 days. On the puts, and I was looking at this one, the 165, that's right. Extrinsic, 49 cents on $6 is less than 10%, so that's good. 258 on 305 is not good. So that is not what we're going to use. We're going to use the 165, and we're going to put this one trade on, and that's going to be it for the day. So the only trade I'm going to put on right now is J&J, August 18th, 165 puts. Be sure to get the appropriate position size for you. This is how, look, I got to tell you, looking at these, I think we had, it was an ugly losing streak, 8 or 10 in a row. The only way you survive is position sizing. The only way you survive is position sizing. I'm going to draw down, but I'm going to make it back, and I'm not stressed about it. If I didn't position size correctly, I would have nothing. And that's what happens to most people, right? They have a losing streak. Every trading system is going to have a losing streak. They have a losing streak, and because they didn't position size correctly, there's nothing to show. They have lost everything. This really drives home the point of how important it is to position size correctly, because you never know when you're going to hit those winning or losing streaks. So, back to this. Be sure that you put on the right position size for you to survive, just in case things don't work. Next, J&J, August 18th, 165 puts. See if I can get filled. I'm going to put in an order at 590. Okay, I'm filled. Average fill price, 589. Okay, 589. Drop this in the Discord. Let me just make a note real quick. So, 7, that's not 7, 7, 10, 23. Starting by closing all open positions and going back to cash. 7, 10, 23. Trade number 1. This was the bought J&J 8, 18, 23. What's it called? 165 puts for 589 when trading at, it's currently at 159.63. Okay. So that's it. That's the only way to survive is by position sizing correctly. So the plan with J&J is if it hits the 10 EMA, which I'll be able to start updating you on the what's it called, planned exit points like we used to do. And that will be either stop loss planned exit points. Those will be easy to do each day. The outlier exit points, they come when it's this shade of pink right here. That's the exit point that I've been using, which for those of you playing at home is actually it's this shade of pink. And that is F0 AEC7. But the point is, taking those trades off while we got them. So that is everything for today. Brian's stocking a Yorn. He went in February, and it's pleasant. Very cool. Looking forward to catching up with Brian here in a couple of weeks when I go to do some consulting in Atlanta. Other than that, let's move into our final thoughts. You know, I've had the opportunity to work with a lot of really, really talented traders, market wizards, and one of the things that I was thinking about this morning while I was having these trades on, I was like, you know, would Mark, would Tom Basso, would Jason Shapiro, would Larry Hite? Definitely wouldn't. I know that for sure. Would any of these keep these trades on? And of course, the answer was no. So I needed to move. That really was what prompted me this morning. And then I saw this tweet from Steve, and I'm like, you know what? I feel like this is appropriate, and definitely a reminder to myself. Don't predict, react, right? The market's telling a story, learn to listen. So let's break that down. Don't predict, react. The market's telling a story and learn to listen. So the market right now still shows a sell signal on SPY, right? We see that. So we're only looking to go short. The market still is under its 10 EMA. And then we take a look and we're listening to J&J, which got a new sell signal today. The market's telling a story, learn to listen, right? And so if we got those signals and it works and we're listening, right? We're doing the right thing, like we did over here, doing the right thing, taking those signals, listening. But even when the best signals that you've got come, not everyone is right. And if you don't listen, if you don't react, then it's just going to work against you, right? So to Steve's point, don't predict, react. Even though we're using, in my opinion, some of the best data in the entire world, I'm so stoked about, so glad to share this with you, it doesn't always work. And rather than sitting here and predicting, oh, the SPY is going to come down, the SPY is going to come down, it could take 3 or 4 weeks before that actually happens. But in the meantime, you got to react and make it work. So thank you all so much for coming today. Looking forward to making this work. Looking forward to getting out of this drawdown. Looking forward to having some really amazing trades. And of course, right now, the best thing you can do as a trader is always to reduce risk. And so we're going to be doing that even more strongly than we have been over the last several weeks. So every trade has an opportunity to win or to learn from it. This is an opportunity to learn from them and improve on them. Thank you all so much for coming. Have a fantastic afternoon. I will see you right back here tomorrow. Talk soon. Hey, by the way, don't forget, you need to get the Bullish Power cheat sheet, and it's totally free over at 10minutestocktrader.com.